thank you. Welcome to the Warrant and Finance Committee meeting for March 27th, 2023. First thing on the agenda is the Pledge of Allegiance to the flag.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
We have a full board tonight, so we won't need to appoint any alternates to vote. The next thing on the agenda is approval of the minutes of the last meeting.
I'll make a motion to approve the minutes of the March 20th, 2023 minutes, as written.
Second.
Any discussion? Seeing none? All approve?
Do you approve?
I was reading
Under old business, we have the message from the chair, and I'm only going to talk very briefly about last week's meeting. As everybody knows, it wasn't our normal meeting. It kind of went downhill at the end of it, and it's the first time in close to 3 years we've had that experience. Whether what I said instigated the whole thing or not, I guess at this point it's irrelevant. But what I do have to say is I apologize to the committee. As chair, it's my responsibility to make sure that things like this don't happen. In my defense, if there is any, I was sitting here thinking about how I was going to handle what was happening. And what I should have done is just stopped it when it started. As far as I'm concerned, last week's meeting, last week the selectmen addressed their concerns. And as far as I'm concerned, last week is last week. And we're gonna move on from here, like Tom said. And there's gonna be a few changes. As you all know, Margarita sent out an email this week to the committee. And I sent out a response. I didn't get any negative feedback, so I guess none of you had any issue with my response.
I appreciate your response.
I don't talk eloquently like some of you. I'm kinda just say things. I've been doing this forever. And I have aggravated everybody. Has anything to do with politics, from the selectmen to the road commissioners, to the school board, to the fire chiefs, and anybody that's been around and knows what I've been doing for the last 50 years, they know that's the truth. I've aggravated everybody. And most times, it isn't what I say, it's how I say it. And like I said, for that I apologize to the committee. But with that being said, you find yourself as chair of any committee sometimes laxing your responsibility as a chair. And what we've agreed to is run under Robert's rules as close as I can anyway. You know, I'm not a expert on it, but I know basically how we should be operating. And when things go good for a while, at least I tend to lax on the procedures we're supposed to be following. And people are speaking up, either from the committee or from that side, without being called on, or they just say stuff and we have the conversation. The only way to avoid the deterioration that we had last week is to run the rules the way they're supposed to be run. And so from this point forward, all questions that anybody has will be addressed through the chair. Whether it's on the committee or whoever we're meeting with, whether it be the selectman, fire chief, or school, or whoever. We got about another 6 weeks of meetings we got to get through, so I'm going to do my best to follow the parliamentary procedures, and I'm going to adhere everybody to it. Okay? And like I said, I take complete blame as a chair for the deterioration of that meeting last week. It doesn't matter what one person said or the other person said, it's all my responsibility to make sure this doesn't happen. And that's the end of the discussion about this issue, as far as I'm concerned. And we're moving forward. Like Tom suggested at the end of his talk at the selectmen's meeting, he said, we hope we can move forward. And that's completely my intention. And that's it for that. Before we do move on, under new business, it would be number 3, is making recommendations on the warrant that the selectmen are presenting to us tonight. And I guess we'll go, hold on a minute. I gotta get my glasses back on. And the first, which is Article 2, is to see if the town will authorize a select board to invest town funds for the town of Acton's investment policy. And you all, if you've watched the meetings, I think it's been online, you have a copy of the investment policy. And I'm gonna ask the powers that be, specifically Tom, to go through this and give his explanation of why he wants to have it. Is that okay, Tom?
Excellent, thank you.
You don't need to go to the podium, Tom.
I like to stand.
Okay, you can go stand.
Good evening, everyone. We have PowerPoint presentation here. You all have paper copies. Probably tomorrow, we're going to be posting this on the town's website, so everyone will have access to the same information for those that may be watching this from home. The first item is Article 2, which is to see if the town will authorize the select board to invest town funds per the town of Acton's investment policy. This is something that was acted on by the selectmen at a previous meeting and is probably available on the website as well. So, the proposal to incorporate the new investment policy and approach to investing surplus cash. At the end of the last fiscal year, June 30, 22, we had a little short of $6 million sitting in our cash account. Now, cash accounts go up and down throughout the course of the year. They go down while we're waiting for tax revenues to come in, then they'll come back up. So that's $6 million, just happens to be a point in time, June 30. But at certain times, it'll be less than that, and other times it'll be more. So this is, it's basically not exactly equivalent to, but it's equivalent to all of our fund balance accounts. There are some amounts of that tied up in receivables, et cetera, but it's more or less equivalent to fund balance, and the undesignated fund balance is the most significant fund balance account. It also includes reserve or fund balance accounts for the for the school. I've laid out here what the investment objectives would be in pursuing this program. First and foremost is the preservation of principal. All this says is we don't want to lose any money. If we're going to put money into an account, whether it is a checking account, savings account, CD, or what we're proposing here is T-bills, you want to be able to get back what you put in. And the objective here is to earn a rate of return on that. So the first objective is preservation of principal. Liquidity. We want to make sure we can get access to this to meet the cash needs of the town. So we want access to these investments to make sure that we can have adequate cash to pay the bills. Credit quality. We want to make sure that we're investing in securities that are of the highest quality. From my perspective, those are US-backed securities. These are backed by the full faith and credit of the US government. You can't get any better than that. When you think about your money sitting in a bank, and it's FDIC insured. There is an FDIC that has cash reserves in the event that there is a bank failure, and we've seen that in the news recently. I'll tell you, if all the banks failed, there's not enough money in that reserve account to cover all that. They simply don't have enough to do that. No one's expecting a catastrophic failure. So who's there to back it up? The U.S. Treasury. The U.S. government is actually backing up those deposits, as we've seen most recently with the bank in San Francisco. And the objective is to generate the highest return so long as items 1, 2, and 3 are met. That is, you preserve your principal, you have access to your cash, and you invest in only the highest quality securities. So at that point, you want to generate the highest possible return you can, given those constraints. This next slide is my attempt, I guess it's the top is chopped off. This is to just provide a visual of the various, and these aren't all the investment options that might be available in the world, but the ones that I think most people think about. You put money into a savings account. It's probably going to earn something less than 1% today. And it could be significantly that. It varies from bank to bank, but roughly 1%. You could put your money in a CD, and depending upon how long you're willing to lock up that money, if it's only for 30 or 90 days, then you're going to get a lesser return than if you put it out for 3 years. But when you do that, if you want that money back, you're going to pay a penalty, and you're probably going to lose a certain number of months' interest if you do withdraw that or take that back early. And the next one is Treasury bills, and these are basically securities issued by the U.S. Treasury that generally have a maturity no more than 1 year. Now, bonds and stocks, of course, we're not going there, but just to show you, on balance, bonds can have 6 or 7% return. They can actually have a higher return than that, but on average, that's generally where bonds are yielding today. If interest rates go up, you lose money on bonds. You can actually, your bonds will be worth less. If you go to cash them in, they're going to be less valuable. So the red here is to depict the possibility of a loss from those securities. And of course, stocks, we all know that those can go up and those can go down. And so there's an even wider range of outcomes with stocks than there are bonds. What we're focusing on in this policy consideration is Treasury bills. So what are they? They're backed by the full faith and credit of the United States government. As I said, they're the safest investment available. How do they work? T-bills have a maturity between 1 week and 52 weeks. There are securities out there that are issued that can vary during that term. They have a fixed rate, which means the rate that you're quoted when you buy the T-bill is the rate that you'll get over the term of that T-bill. If it's a 1 week or a 52 week, you'll get that same rate over that entire period. When you actually buy a T-bill, you buy it at a discount. You buy it for the amount, take the face value of the T-bill, let's say it's $1,000, and you expect to earn 5% as an average, as an example. So you're going to earn $50. So what you actually pay for that T-bill is $950. When the T-bill matures, you get $1,000. So you're getting your $950 originally invested plus the interest. And so long as you hold that T-bill to maturity, that's what you're going to get. It's not going to change from that. No matter what happens to interest rates, that's the contract that we've signed with the U.S. government. We're going to invest $950 in this example, and we're going to get back $1,000. Any questions? Okay. How will it, what we're proposing is to create what's called the laddered portfolio strategy. And how it will work is we would open up a brokerage account at a bank or some financial investment firm. We've looked at a couple already, and at some point, if this gets adopted, the select board would make a final determination as to who that might be. I'm sorry, it says TD Bank. It's really not been determined TD Bank. I'm sorry, that wasn't changed. Will invest the funds as directed by the treasurer, the town administrator, or anyone else designated by the select board. The select board will determine the cash needs for the next 12 months. We will develop a cash forecast, and it will determine what the peaks and valleys are in our cash balances over time to know exactly what we will need in cash to make sure we can pay the bills. We have enough cash to pay it until the tax receipts come in, and if they're in excess of what we need, then we'll put that money out and invest it. Based upon the town's anticipated cash needs, we will purchase T-bills with a staggered maturity. And what that means is, right now, there's no benefit of going out beyond 6 months. When you go out beyond 6 months, the rate you earn goes down, which is kind of counterintuitive. It's a strange event that's going on in the fixed income world today. That's not normally the case, but right now you get your highest return from basically 1 week to 6 months. So we're focusing on that. Now that could change in the future. You could find that 9-month securities are advantageous, and we could want to perhaps go out a little bit longer. If we did that, we would have a portfolio constructed that would have securities coming due every month. So that at the beginning of the month, we'd know we'd have, in this case, a T-bill coming due in 30 days that will mature, and we will receive $750,000 in this example. We can decide to roll that over and buy it as it goes from 30 to 0. We could buy a 6-month T-bill, and the 6 month is now 5 month, the 5 month is, that's why they call it a laddered portfolio. So it actually becomes rather automatic, and it makes it very simple for the investment firm, given the instructions we would provide, to be able to administer and execute those transactions. So you could invest all the money that's maturing, you could invest some of it or none of it. It all depends on what you need for cash. And that's something that we'll be continually looking at, sort of updating that cash forecast to make sure that we've got adequate cash. I would not expect that we would take all of our surplus cash and put it into these securities. Some of it's certainly going to be kept in a checking account, which is obviously where our checks are drawn against. There is at the moment, we have money at a bank, and it's basically a savings account that is structured in a way that allows us to secure the $250,000 FDIC insurance for the full amount that's invested. That's currently earning 1.5%. When we first started to look at this, it was earning 0.6%, and that's when treasuries were earning 4%. So we were really losing quite an opportunity by the way those monies were invested. They've now upped it to 1.5, called them the other day, they said they're looking at it, but I don't think there's anywhere that they're gonna get to what a T-bill rate will be. They're just not gonna offer that. So, there are money market funds out there. This is just like money market funds that we're all familiar with. And typically with money market funds, they have all kinds of different securities in them. They may have some treasury securities, they may have some corporate securities, all kinds of different. This particular money market will only invest in U.S. treasuries, and they're variable rate treasuries. The treasuries get set every week. The rate gets set every week. So as rates go up and down a little bit, the rate on all the securities will change accordingly. And so this will allow us to earn a higher rate of return, probably something 4+%, but like a money market fund, you can get at your money daily. We can execute a withdrawal from the money market fund, place it into our checking account as we need it. So it's a really nice feature for keeping money liquid beyond what you have in your checking account versus what you have in T-bills. This one allows you to keep a certain amount of powder dry, so if you need it, you can get at it. Okay, any questions? Please ask questions as I go along if you have any. Yes?
Okay. I have I'm kind of like an economics nerd. I have a bachelor's in accounting and economics, so I keep up really pretty well with what's going on with the economy. And just a couple other little pieces of facts. The FDIC only requires a 1.3% reserve for the deposits. So they have a very, very small amount of money compared to the amount of deposits. So it's only 1.3%. And Janet Yellen, the Secretary of the Treasury, a couple days ago come out and said that in the event of another crisis like 2008, small banks will be sacrificed. And only banks that are considered too big to fail are going to be bailed out. And underlying, other economists are saying that there's not only going to be bailouts, there's going to be bail-ins. So that's something to keep in mind. I have a problem with this because I don't know how much money we have in surplus funds, and if we have excess surplus funds, that implies that we're overtaxing the people, and we're holding money that actually belongs to the taxpayer. We could do this, and Tom, I commend you because you, as a financial person, are looking for the preservation of principle and to make money on what we have. But we're in an unprecedented time where inflation is skyrocketing, people are hurting, people are living week to week, and we need to look at that as a town. There's actually three options that of what we could do with this money. We could follow your investment policy. We could invest in infrastructure in the town, take care of our roads, do the things that need to be done to help the people. Or we could return the excess funds to the taxpayer, which is who it actually belongs to. Now, I think that we need to know how much excess funds we have, and we need to decide, and I think that the taxpayer needs to, and town meeting needs to decide this, what we do with this money, whether we invest it and keep rolling it over, whether we do the infrastructure, or they want their money back. And it needs to be, there needs to be a time frame on that, to make that decision.
I happen to agree with you. We've talked about this a couple times at the select board meeting. I would agree that we have too much in reserves. And I don't think it's a matter of either or. I think if we were to draw down these funds, the question is, do we draw them down all at once? I don't think so. That wouldn't be my plan, but that's certainly an option taxpayers could choose from. But if it's going to be spent for capital, it's going to take some time to spend that. You got to develop projects, you got to do design, et cetera. That's going to take probably multi-years to get to a point that you would actually draw that down, depending on the project. It's going to take you some time to do that. If you're going to draw it down in taxes, one option is to take, let's say you got $3 million excess cash, because you always want some surplus cash. You always want that. So let's say this is not my learned opinion, but let's just assume it's $3 million. Do you drop $3 million as a credit so that you lower your tax rate in 1 year? It's an option. Personally, I would not be in favor of that. I would like to see that done over time. My point is that you're not going to draw, I believe, those cash reserves down all at once in a day. The extent to which we're leaving it invested today at 1.5% versus, let's call it 4.5%, that's 3% on $6 million, that's $180,000. You divide that by 12, that's your opportunity cost each month that you delay. So personally, I think there's an urgency to move forward with that. With the laddered portfolio construction, I think we're going to know what we're going to do before we're actually going to need the cash at least 6 months in advance. It's going to take some time for that to go through the process of approvals and through the town governance process. And depending on how you spend it, it's going to take a while for you to draw that actually down.
And I certainly understand that, but what I don't want to see is the can get kicked down the road over and over and over. I mean, we've been accumulating this money for how long?
Yeah, I'm still waiting to see the audit. I've done my own calculation of what I think the financial results were for the year. I've done as best I can to figure that out. I think we had another surplus. We had a surplus in the school. I think there are some to be determined reasons why we consistently have a surplus. Should we? How big should it be? How can we develop that so that the bottom line is closer to what we actually anticipate in the budget? You got surplus reserves, then you ought to be able to develop a budget and hit it. We're not doing that historically. And so it may be, I think, as Dennis has pointed out, we aren't taking into account new property valuations that are coming online and figuring that in a tax rate. I'm not sure I haven't had a chance to delve into it, but the level of surplus is beyond what I think it needs to be. And in fact, we ought to be willing to run a deficit if we have too much cash. Deficits don't bother me, so long as you're planned deficits, and it's anticipated and planned drawdown of cash reserves. Now, these are my opinions. They're not the opinion of the select board, but I'm just sharing you my thoughts, trying to respond to your question.
Go ahead, Margarita.
Thank you. Is it possible to do a little bit of each or two of the three options? For sake of easy math, if we had $3 million, is it possible to say we're going to invest $1 million, we're going to, in stocks and T-bills, invest $1 million in infrastructure and give back $1 million? Just for easy math, you know what I mean? Yeah. But is it possible to do and?
Yeah, it's possible. I guess I'd want to think about what the possibilities are that we would want to do and look to see what the maximum cash draw from that might be. If you decided you wanted to take $3 million and lower the tax rate, and I guess half of that would be due, when the taxes due in October?
October.
October. So you maybe a draw of $1.5 million in October and another $1.5 million later in the spring. You could do that. But even in that example, you've got time to prepare for that. I don't know, it's my background. I never leave idle cash laying around. I always try to invest it so that it's safe and maximizes the return. It's just my training. And if we can do that and not not prevent the town from taking whatever action it ultimately decides is appropriate to how they want to use those reserves. If we can invest that money, maximize the return, and leave those options on the table for the town, to me, that's a worthy strategy to pursue. Just my opinion.
Joyce?
This is coming actually from capital improvement. If you have, I'll take Margarita's $3 million and I'll spend it in about 5 minutes.
Yeah.
And I think, for me, if you look at the big picture, I mean, the big picture, go back to capital improvement. I'm going to pick on the fire department, okay? They are going to need a new engine within the next 5 years, they tell me. They need a second ambulance. I have just spent $800,000 on those two things.
Yeah.
Okay? I think it's close enough to call it $1 million. We know that. We know it would be wonderful to have turning lanes at the transfer station. That takes money.
Yeah.
That takes engineering. That takes everything. And it seems like if you look at that whole big picture, and we have the investments going, you know, I'm not going to be afraid to say, we live on West Shore Drive. We need a culvert. The culvert's going to cost us, I don't know what that's come out to be yet, but a couple $100,000? It would be very nice to know that we don't need to worry about that. The engineering's going to be done, the right people are going to be put in place, and this is going to cost us, I don't know, $200,000. We've got that money coming up to us August 1st. That's when we need it. I think there's a way of paying it to the town without messing terribly with the taxes until we know the absolute bottom line.
The way I would approach this is you need a longer-term financial plan that will lay out what the operating needs are of the town, the operating expense budget needs are of the town, what the capital needs are of the town. And with that, you develop a multi-year financial plan that would take us from where we are today over a period of time so that you can have a discussion in the town about what's the balance between tax relief and capital. That's going to take some time for that discussion, I think, to take place. There are going to be people that will want to see capital improvements, others that will want to see tax relief. And so I envision that the town will have to create a process for that kind of examination and dialogue to take place. I think it's a wonderful one. What a great problem we got. And because it's got great opportunity in it. But I don't believe we're going to make that decision by November. I personally would not be in favor of that. I would take some time, develop that plan, and then lay that out to the public with all kinds of public hearings and input to the process. And then from that, hopefully we can develop some consensus about what would be the appropriate balance between tax relief and capital. But it's going to take time. But I think acknowledging that we have this excess, and we still haven't determined what that is yet.
Right.
And that's step one. I need to see those financials from last year to really understand where that $6 million is coming from. But once we have that, then I think we can begin that discussion.
Joe?
Who in the town hall would have the authority to release some money from the treasury bills? Like say if we need $250,000, to pick up the phone and say, you know, send us the money.
Town treasurer.
The treasurer would have the authority.
Yeah. They currently do that today. They have access to the bank accounts today. They are the one that execute those transfers. Am I correct, ladies?
Yep.
Yes. Okay. So they will continue to do that. I will say that this being new, and we'll be adding a new counterparty, being this financial institution, Personally, I would want to be, and the other selectmen, I think, sort of overseeing this and until it's become somewhat routine. I think once we figured out what kind of cash reserves we want to maintain going forward, then I think at that point it will become fairly routine, and hopefully the selectmen can back out and the treasurer would be able to execute that.
Dennis?
Bill?
Sir, I have a few questions or points with it. Are currently all these funds in that 1.5% account you mentioned?
Yeah.
And do you have have you been discussing what percentage of that you would want to put towards this policy as far as T-bills?
Well, as you can see, the way it works today is we have what's called a sweep account. And the checking account, we write checks against it. Each day we put cash into it. And every day the bank takes that balance and sweeps it out to the savings account that I was describing that earns the 1.5%. So it cleans out the checking account to some level.
$10,000?
$10,000. So there's always $10,000 in the account, but everything else is invested in that commingled savings account of 1.5%.
So are you considering investing all of that in this latter process of buying T-bills?
Now, I would imagine we would keep some money in that account to support the sweep transactions that routinely take place. And we'd have to determine how much we want to keep in that account for that. I would then look to keep a certain amount of the treasuries, or the amount above that, in this treasury money market fund that I can get at daily in the event that there's some unforeseen event. The exact amount of that we haven't determined yet. And then whatever is left over, I'd put out in treasuries on that, in that laddered portfolio structure.
On the negative side, there's obviously going to be some small brokerage fee if you're going through.
Yeah.
And then, does the town, I'm sure they have to pay interest on to federal tax, right?
No, we're tax exempt.
For federal tax on the T-bills?
The town does not pay state or federal taxes. No. It's a wonderful position to be in.
Yeah, okay. I understand how these work and laddering them, which is a good idea, but the same thing with Leslie and the capital improvement, that's a lot of money, and what you pointed out as far as being able to do maybe one, two, or all three of these things, obviously, because when you're saying, the investment policy is looking at taking a large percentage of this perhaps,
Yeah.
and doing one thing with it, right? Which is invested in T-bills as opposed to capital improvements or changing the mill rate.
You should be aware that we have an investment policy today. All of those accounts are investments. Anytime you have anything outside of a checking account, I think of it as an investment. Whether it's in a savings account, whether it's a CD, T-bill, stocks, bonds, they're all investments. So we have a policy. This was sufficient enough change that we needed to revise that investment policy, recently adopted, voted on by the select board, and significant enough change that we wanted to go through this process to make sure there was a full awareness of what we were doing and acceptance by townspeople.
Is that it, Bill?
For now, I think so, yes. Sir.
Okay. Charlie?
No.
Oh, I'm sorry. Go ahead, Charlie.
No, go ahead, Ray. Go ahead.
I guess I'm just a simple kind of country bumpkin. And I'm hearing a couple of words on a continual basis. I'm hearing surplus and access. Okay? To me, in my dictionary, that means it's more than what you actually need to run this town. Okay? And that obviously came from taxpayers. That's exactly what Leslie said. In today's environment, with everything that's going on, the price of food, and everything that's going on, this is money that I believe there's a fourth option that could be available, and that's to return half to the taxpayers of Acton and invest the other half. To me, that's the way I would see it, because, like I said, everybody's struggling. We see it, And like I said, I mean, listening and surplus and access funds, and last time I asked the question, it takes, I believe, it was 1.4 million per quarter to run the town. Those are the figures that were given to me in the meeting. So, yeah, this is the public's money. Looking at the liquidity that if you would need, even if it doesn't, if you need, let's say, for example, you're saying on the ladder program, 1 month, 2 months would be maturing. If you need 2 to 3 months worth of money, I don't see how that would happen, but in case it did, then you would actually have to sell those T-bills at a loss.
Well, if rates, first off, the loss,
Or they wouldn't be for face value.
I don't want to repeat myself. I think I kind of addressed this, but the point I want to make is if you have the cash, whether it's surplus, whatever it is, we're sitting on a lot of cash, whether it's more than we should have or not. And from my perspective, we're going to be sitting on that for a period of time. So what we do about that is one matter. What I'm talking about is where do you place it while you're holding it? And that's what this is trying to address. It doesn't prevent the town from doing anything it thinks it should do with that money and when they want to do it. They're two independent things. If you have money sitting idle, and if it's for any period of time, and in my world it's 30 days, I'm going to make sure I maximize the return, because that's just revenue that goes to enhance the town's budget. So whether you want to spend that for any of the reasons that have been identified here, those are all on the table and are not precluded in any way by the investment of these monies. Because I don't think you're going to move over the next 3 months to spend $3 million in cash. But even if you are, if there's wind of that, then we can adjust the ladder portfolio accordingly. And I can put it all in that money market fund, Treasury money market fund, and earn not quite as much as we would in T-bills, but still earn a decent return. But at this point, everything that I can see and understanding the process the town, I think, would likely go through to answer these questions about what do we do with the money, I think that's going to be a period of time, and if we can safely invest it with no risk of loss, and it's fully guaranteed by the U.S. government, I think we maximize the return, so long as we don't prevent any of those options that might be considered by the town. Does that answer your question, Ray?
In a way.
Okay.
In a way.
All right, it's the best I can do, I guess.
Go ahead, Charlie.
All right, well, I probably like 80% of what you've presented so far. First thing I just want to point out, this investment policy, why do you use as number one, safety, as opposed to preservation of principal?
Well,
Safety is a very flaky word to use there.
I think when you look at, regardless of the word.
Well, I mean,
look
this
at
is the policy.
No, I understand, but look at the securities that are allowed in the policy. They all are designed to preserve principal.
And that's what that word should be replaced with.
Okay, all right, yeah.
All right, because that word is meaningless in a financial statement. I understand some of the interest in that goes beyond what you're trying to do. You're trying to set up a fund, and I think that's absolutely fabulous. I was kind of shocked when I heard that there was all this money sitting on the table, earning basically zero.
Yeah.
1.5, you're losing money.
Yeah.
When, you know, the rate of inflation is 3 plus. So it's basically zero. You're earning nothing, or you're losing. And here, just a few years ago, we took out a loan to pay for a fire truck. In other words, we lost even more money servicing that loan.
Right.
In reference to And there's been several other expenditures that we've been paying on that. With all this money sitting here, and it didn't happen overnight, and this happens before your time, so I'm not barking at you. This is just speaking out to the general public, basically, that this should have been addressed years ago. I'm happy, really happy that it's finally being addressed. But to address the issue about how to actually distribute it, which is beyond what you're trying to do, there should be, if there's projects that need to be done on the quick, they should be done. Number two is, you said that the treasurer has the authority to disperse funds.
Yeah.
What is the threshold for that?
Okay. First off, let me make clear that all of the movement of money is what I would call a coded transfer.
Okay.
It can only go from one Town of Acton bank account or brokerage account to another bank account, brokerage account for the Town of Acton. Nobody is authorized to transfer money out of these accounts and put it in the Caymans. I just want to clarify that, because people will ask that question. So it's called coded transfers, so it's only going from one Town of Acton account to another. All right, so.
My question was more, if you're transferring the funds, if you want to call it a coded, to a particular cost center or expense that's already been, that the town has, what is the threshold that they're allowed to do?
There are no limits that we put in place.
So
Now,
they can exceed the budget amount?
They use the word a cost center, I'm not quite sure. No, it's not, the transfers are not based per se on some calculation on a gross budget. The transfers are based on, we got this cash in today, we dispersed this amount of money today, the cash balance is a net decline of X, we gotta move money out of these accounts, in this case, the Treasury money market account, to cover that shortfall.
Yep.
Or it could go the other way.
Yep.
So that's what the transfers are.
Okay, so the treasurer really doesn't have the authority to take funds out of any of these accounts, excess into an expense that the town has incurred without the town or the board's approval, correct?
The expenditures are managed through a warrant process.
Good enough.
Right? So every week, when we come in here at 5 o'clock, we review all of the invoices, there's a warrant that's prepared, and the 3 selectmen sign it.
Yep. No, I understand
And
that.
that authorizes the treasurer to issue those checks.
I just wanted clarification, because the way you said it before, it sounded as if
Okay.
the treasurer could just write.
No, I'm talking about transfers as opposed to
Okay.
writing checks.
And what is the typical, because you have these in 750K tranches.
Yeah, it's just.
What is, I know, it's just a wag.
Yeah.
But what is the typical expected need? Because I thought that's a little high.
My colleagues probably would agree with you.
Okay, yeah, I mean, I would go 250 to 500 tops.
Huh?
I would go in 250 to 500 increments.
It's an opinion.
Provides you more flexibility so that you're not losing interest on investments.
It's a judgment.
Yep.
And, it depends on your comfort with how comfortable are you about our cash forecast?
So,
What degree of certainty do you have about that?
so back to my question, what is your expected?
I gotta tell you, if we had $4.5 million, that's what I'd do. If we have 6, I'd wanna look at the cash forecast over the next 12 months, find that low point, probably subtract 500,000 to $1 million from it, and that's what I would invest.
Okay.
All right, make sense?
Yep.
Okay, Charlie?
Yeah, I think that's it.
Okay.
I got another question then.
Oh, go ahead, Phil, I'm sorry.
The liquidity side, the bills have to be sold on the secondary market, right?
Yes, these are not original issue bills, but secondary issues. They're cheaper to buy that way.
So how does that affect liquidity, especially if interest rates, let's say, go up?
If you hold the security to maturity, this is a buy and hold strategy. This is not trading. If you buy and hold, you're gonna get that rate that's assigned to that security. It's guaranteed. If you sell it early, if rates go up or down, you could have a gain or loss, but we have no intention of selling these securities early. But I will say, even if you did, it's when you have and if I get in the weeds, let me know, but when you got a bond and interest rates go up, and it's a 30-year bond, and interest rates go up by 1%, you can lose a lot of money. If it's a 6-month note, you're not gonna lose a lot of money in that instance, and that's why we're keeping them short, but we have no intention of selling anything. We'll do our planning with enough cushion in it, so we won't have to sell them. But even if you do, any sort of loss would really not be all that material.
Liquidity is still pretty quick, even though they have to...
Yeah, you got something coming due, in this case, $750,000 coming every 30 days. That's a lot of cash for a town with a $8 million budget, something in that, yeah.
Okay, Phil?
Yes, sir.
There's only one person on the Warrant and Finance that hasn't spoken yet about this. And first off, I have said for quite a few years, that we are gaining too much in our unassigned fund balance. 10 years ago, we had about $600,000 in it, and now, as everybody knows, regardless of what the number is, it's more than we need to operate. Our total budget maximum is $9 million.
Yeah.
And if we have $6 million, for lack of better words, I'm not gonna say it like Tom does, if we have $6 million in the bank, that's 2/3 of our operating budget.
Yeah.
And I doubt very much there's another town or city in the state of Maine that has 2/3 of their operating budget in the bank at the end of the year. I don't believe it.
I don't know. Yeah.
And what Tom has done and brought this to light, and he brought it forward to the people with his expertise in this, and I appreciate, we'll be dealing with this issue, one way or the other. The people can decide however they want to deal with it. It's all up to the selectmen, what they move forward to the people.
Yeah.
But what I'd like to know is what I'd like to see, and this again is all up to the Board of Selectmen. We have an issue with this, and we need a solution. And what Tom wants to do is get as much money as we can back in our coffers until we come up with a solution to address the problem that we have too much money, more than we should have. And the other thing I want to ask him, Tom has made this presentation tonight, explained it very well to everybody. Everybody's had a lot of good questions. Do you and are you going to support what Tom presented tonight?
Yeah.
Okay.
I do, I feel, I mean, I understand, you know, in the long run, we could lower taxes if our money's put away and we're, you know, making money off of our money more than we are now. Or capital improvements, you know, start thinking about those things that we need to do. You know, there's all different kinds of options, you know, when we can earmark the money so it's not just sitting there, that, you know, okay, so much has come in and, you know, we want it to go to roads, or next year, the year after, you know, whatever it is that we need, and we could lower taxes, fix our roads. I just think that, you know, it's in the bank. It's there and it's not doing us any good right now.
I just wanted to, is dealing with the finances of the town, which is what we're supposed to be doing. I know what Tom has said, and I just wanted to hear your commitment to hopefully come up with some kind of resolution for the next year, working with all the departments, and it's like Tom said, I know we're not gonna have this solution by June.
Right.
Or November, but I don't want the same problem to keep happening.
Right.
And until we get this situated, I support 100% what the Board of Selectmen are saying we ought to be doing with the money until we can solve the issue.
The next agenda item?
Yeah, we're gonna move on now, let's do it.
No, I don't want to move, I didn't mean to interrupt you. I just want to say, the next article will assist us in going through this process, and I'll talk about that in a moment. But there's a sort of a resource that I'm proposing to bring in that would actually help us develop this financial plan.
You got something, you can go ahead and say it, Leslie, I'm sorry.
Yeah. On the investment policy, just the two quick things. It says, an accounting of the town's cash investments shall be made monthly to the select board. Shouldn't that also be presented to the people when you're given the accounting?
I'm all
For
about transparency.
transparency's sakes?
As far as I'm concerned, I would love to see on the website, and we would have to discuss this. My own personal view, I think we ought to have budget, the actual periodic disclosure of that. It's just electronic means, you just put it out there. If we have it.
Well, anyone could.
So forecast, all of this should be very transparent.
And the second thing, have we identified exactly why we are accumulating so much money? Do we actually know why it's, what's driving it, so we can fix it, so we're not continuing to overtax the people?
I can take that, Tom.
Please do.
I mean, I'm used to the arrow, so, we've under budgeted our revenues.
And over
Okay?
budgeted,
And
the expenses.
Expenses. And I guess, I'll go back to what I said. How we got here at this point is irrelevant.
Yeah, yes.
What I want to know is from the selectmen, and because I'm not telling them what to do, but they're the ones that are responsible for moving forward, how we deal with these issues. And in the short version, we have a commitment from two selectmen that says that they're gonna try to come up with some kind of a solution in the next year.
Yeah.
And I appreciate that.
Okay, good.
So what I'd like to do now, Tom, is go on to we spent about an hour on this one, I'd like to go on to,
Okay, Article 3?
Article 3.
Can I just ask one more, for my understanding, if, between what we're gonna be earning on this, which would be quite a bit of money,
Yeah.
and valuations are gonna be going up since we had an assessment to be done.
Yeah.
This fund is just gonna keep,
Well,
getting pretty damn big.
I think, as valuations go up, that's going up. The town budget is only going up at whatever inflationary rate is approved in the town budget. The math is, the tax rate has to come down. So that's all to be determined, exactly what that movement's gonna be. But while the valuations go up significantly, I believe, based on what's been happening to local real estate prices, my guess is we'll have a significant drop in tax rates. But how much of that actually accrues to people as a reduced tax bill depends on how much your property went up versus how much your tax rate went down. And it will vary from person to person.
Just a question or clarification, that's what's gonna happen.
It has to happen.
Between that and the interest rate.
I believe by, it has to happen.
I don't believe that this reval is going to change the actual property taxes very much that the people are gonna pay. That it just doesn't make any sense.
You mean in total, or?
In total, what they're gonna
In
pay.
total, it's not gonna, no.
It won't take what I have to pay the town. So my valuation might go up or might go down, but the town needs $6 million to operate,
That's all we're gonna take.
they're still gonna be asking for $6 million.
That's right.
I guess is what I'm saying.
That's right. That's right.
Go ahead, Tom.
Okay, now on to Article 3. Let me read it. To see if the town will appropriate $65,000 from the unassigned fund balance, which appropriation shall carry over into fiscal year 23-24, and authorize the select board to expend said funds during fiscal year 23-24 to engage the certified public accountant services of Barry, Talbot, and Royer.
Excuse me, Tom? Is there a thingy to go with that?
Well, if our town administrator was here, we
Could
could...
I suggest we,
Don't ask me to do it.
can we give her a minute?
Yeah, we'll give
Yeah,
her a minute.
we take a break here, and I'll
Yeah,
see if we can get
not a
Jennifer
problem.
going?
We'll give her a minute.
This one? I think so.
I don't understand if
Is she okay out there?
I'm not sure what's going on.
tax assessment goes
Got it.
up, which, you know,
Well done.
properties now more valuable, which they will be. That means there's gonna be more revenue coming.
Good job.
You got it?
Lower the mill.
Okay,
There we go.
great. I couldn't find her. She'll be along in a moment, I'm sure. Okay,
There we go.
Good job.
We're ready to roll.
Based on two things. the
Thank you.
The value of the property and the mill rate.
okay.
Thank you, Virginia.
I've just read the Article 3, and we can move to the next page. Thank you. Currently, the town treasurer maintains the official accounting records, prepares the weekly payroll, vendor payments, deposits, and records daily cash receipts. The treasurer, department heads, and select boards prepare the annual budget, operating and to the extent we have a capital budget. This is just to set the stage about what we do today. Department heads and the select board are responsible for monitoring the expense budgets to ensure they are not exceeded. R.H. Smith has been engaged for a number of years to prepare the town's financial statements while also performing the annual audit. They're doing both of those. So keep that in mind as we move on. That's a very unusual circumstance, okay? It's not unusual in municipalities, from what I've come to learn, but in, call it the rest of the world, typically the auditors don't prepare the statements and then audit them.
Yeah.
Management will prepare the statements, or someone, and the auditors audit the statements, so there's a separation there. So it's very unusual.
Can I ask a question?
Yes.
Go ahead, Charlie.
Yeah, it's sort of like the fox watching the hen house. But is there a reason why we still haven't seen an audit?
I'm going to get into that in a little bit, but if you want me to go there now, I can, but we're going to cover that.
No, if you're gonna cover it. just
Okay.
Go ahead, Tom.
All right, the select board has tried to bid this out
Go back.
once since I've been here, and I know they've made previous attempts. I can tell you that I personally ended up calling 20 firms in Maine, trying to get them to bid on the town's audit. I couldn't get anyone to bid. And there are a couple reasons for that. Number one, our town audit is, what, between the school and the town, like $18,000, something like that? That's it sounds like a lot of money, but for audit, that's a very inexpensive rate. So a lot of firms, especially when the town doesn't have the capability to prepare financial statements, you're asking that firm to come in, prepare the statements, and then audit them for $18,000. There are very few, firms are exiting the market. The ones that are still doing them, when I call them, they say, we're not taking any more clients, and I'm hearing about towns that are being dropped. There is one firm, R.H. Smith, that has a large number of clients, and they've made a great business out of this. They do a fine job, but they are comfortable doing this, and I've spoken to them, and they've got an approach that seems to work for them. I happened to call one firm the other day, and I said, so why aren't you doing this anymore? Said our insurance company said if we continue to do it, we drop your insurance. Because, it's just not something that is done. So, as of today, we still haven't received the audit for the year ending June 30, 22. Now, we should have gotten that probably in November, would have been my guess. And the town has made repeated requests to the auditor to wrap it up and issue the statements. And we've gotten a number of extended due dates from the auditor saying they're on their way. The explanation that we get is, and I believe there's something to this, they've had turnover. This, and I've heard this from other firms as well. They can't hire people to do this work. And that seems to be the biggest factor, plus the fact that he has a very large number of clients that operate, that are in the same category that we are. And so he's behind. The Department of Education requires that the town and the schools submit their audited financial statements to them. And failing to do so under certain timeframes, you can have your payments put on hold from the Department of Education at the state. They haven't done that yet. We've gotten extensions, and the last extension took us through April 15th. We've gotten a commitment from R.H. Smith that we're going to have statements Friday. Draft statements. Well, that will be great, and once we get the drafts, as long as we don't make a lot of changes, they ought to be able to wrap them up pretty quickly. So hopefully, within a week, we're going to have drafts, and I would imagine before the 15th, when the next deadline comes, we will have the statements and be able to submit them. And as I've already explained why I think so many firms are getting out of this business. We've identified an accounting firm that will perform routine accounting services and prepare interim and annual financial statements for the town. That's Barry Talbot Royer, Certified Public Accountants. They happen to have two segments of the business. One where they're doing this for other towns. So what we're proposing is something that does take place by other towns are employing this firm to do this. And then they also have a business where they do audits. The two don't. In other words, if we engage them to do this, they would not do our audit for the reasons we've stated. The accounting firm will process the accounts payable warrants, record invoice data, prepare payable warrants, and they'll send them to us electronically. So we'll get an electronic warrant that will be available for the selectmen to sign every Wednesday at 5 o'clock, and using DocuSign, if everyone has ever done that, we'll be approving them electronically. They will prepare and disperse all checks. They will perform all bank reconciliations, receivable basically account reconciliations, and reconciliations of our investment accounts. They will provide interim financial statements. To me, this is critical. Throughout the course of the year, there are no statements that can tell us where we are and where we're going. Where we are as of December, for example, and what the forecast looks like through the end of the year. We've never had that capability in town, and I think it's critical for a business to be able to do that. And then they will provide ongoing analysis and assistance to the town in a variety of financial questions and situations. An example might be because they do audits and they do accounting for many other towns, they can tell us what the surplus policy is at other towns. What's the range of policy? How do other towns handle this surplus situation? They can give us that information so we can consider that range of possibilities and help narrow it. But they're in a position to, not only on that, but a variety of other issues, be able to assist us with that. Personally, I would find that very helpful.
Necessary.
Oh, okay.
Necessary.
Hold on.
It's Will.
Go ahead, Will.
So like a minute ago, like the payroll, would we still send our payroll to Kelly every week, or we send it to this new company?
The payroll will be done internally. So payroll will continue to be done by the town treasurer. The accounts payable will be done externally.
But it all still comes here.
So like, what about all like our suppliers? Would we still like, they still send all their invoices to the town hall?
Yeah, they all go to Kelly. It's just, she'll prepare those, review them, do whatever review that she thinks is appropriate, and then send them on to the accounting firm so that they can review them. They'll look at them against budget, and they'll prepare a warrant that will be sent electronically to the selectmen. We'll sign it, and the checks will be issued. Okay?
In other words, well, nothing's gonna change in your world.
No, that's what he wanted to hear. This firm would assist us in budget preparation. They will actually come in and sort of manage our budget process. They have tools and techniques to do that, which, given our previous discussion, I think would be a wonderful addition. They would help us securing loans. If we needed a loan for some reason, they would help us identify some options for what kinds of institutions we might go to and what appropriate structures may be for those loans. Help us manage cash flow. They'll do the cash forecast for us. And capital planning of our longer-term capital needs. You can see how these things are beginning to come together in terms of what we need to go through to figure out what our longer-term financial plan is and how you bring all these elements together. This firm can help us do that. They'll prepare the town's financial statements. They'll prepare them, not audit them. And they'll provide a whole variety of other research and advice that we might call on them to provide throughout the course of the year. They'll be available, they'll come to meetings if we want them here. They're very customer focused. What will the treasurer do, given that we're moving some of this stuff out? I'm not going to go through all of this. Hopefully you've had a chance to review this. But from my perspective, there are some new things that are added here, some other things that I think are being strengthened. To me, I look at it, it's a full-time job. And I think that's the question that people would naturally have. If you're bringing someone in to perform these duties the treasurer previously performed, what is the treasurer going to do? Here it is. And we think all of these are appropriate, and we've had an opportunity to go through this with Kelly, and I think everybody's very comfortable with it. The select persons are comfortable as well. So that goes on for 2 or 3 pages.
Oh, wow.
Okay, so...
Before you move on, Tom,
Yes.
I just want to make this very clear. What Tom's looking at, again, is the means of fixing the situation that we're in and coming up again under this year's, hopefully this next year, coming up with some kind of a plan, which we need professional help to come up with this plan that we need to move forward, and these people do this. And it's not me doing it. These people really know what they're doing. But I want to be very clear, when it comes to our treasurer, that anything we're talking about, in no way, shape, or form, has anything to do with our current treasurer.
Thank you.
What we're talking about is what's happened to bring us here. And I just want to put that out there and be very clear about that. None of this.
No, it's not, this is not any reflection on the skill of our treasurer.
No, not at all.
No.
Go ahead, Tom, I just wanted to say that.
I think I skipped over, but one other thing is, in the course of, trying to get through this current year situation with R.H. Smith, looking at the possibility of engaging this firm, I started to call around to other audit firms, saying, look, if we have a set of fully prepared financial statements, would you be interested in doing the audit? I called 2 firms and they both said yes. So I think there's an opportunity here to consider moving our annual audit to another firm. I only called 2, but the fact I got 2 yeses is a pretty good indication. And it basically confirms that the way we were doing this was really out of step with the way the accounting profession operates.
I think that was identified back in 2001.
Yeah, probably.
Yeah.
The other thing is, you probably have heard me talk about internal controls. And people, I almost hate to talk about it, because people think it's because I don't trust people. Well, basically, I don't trust anyone. But it's no reflection on the individual. We got really good people in town hall.
It protects them.
It protects them. I happened to, I didn't oversee it, but I saw a sister organization to ours. And it was a student-run organization, and they had $1.5 million in cash reserves. And we had the auditors go in there, and they're looking at all the procedures, and everything looked great. 2 people colluded, which meant they got together and decided they were going to steal money. And when that happens, internal controls are only have so much they can do, especially in a small office. So it's just wise, I think, to have a firm like this that's going to be looking at it independently, not have anything to, no particular interest in it. I think it will, for me anyways, create a level of comfort that I think the town would appreciate having. And again, this is no reflection on anyone. It's just, this is what you do. This is just basic business. Okay, so we would engage them, I'm sorry, was there a question?
No? Go ahead, Tom.
All right, we would engage them July 1st, 2023. They will actually prepare the financial statements for the current fiscal year for us as part of that engagement. And they'll have those statements ready October, November? I think October, no, they probably will do them sooner, but that's what they're telling us. So we are then in a position to do an RFP for an audit firm to issue the audit. And they would be able to come in and audit those financial statements. And as I say, we've already identified 2 firms. The annual cost is about $65,000. That covers it. Took longer than I thought.
No, that's all right. That's all right, Tom. Joe?
What you're saying is that if you go this route, you're gonna be possibly phasing out RHR
R.H. Smith?
Company, people, Smith, whatever it is.
We'll have I think, the opportunity to consider alternatives. We may, I don't know what that process will look like and where we'll end up, but hopefully we'll have more than one firm that we can look at.
Would you be able to have either a town meeting or just proposing budgets with this information now? Do you still need the audit to go back?
I'm not following you, Joe.
All right, everybody's waiting for the audit to come in, and it doesn't come in. But with this information, before the audit, will this just give us basic information?
We won't get anything until July.
Yeah.
We still need the audit for last year. They can't work on financial statements for this year until they have a starting point.
No, what I'm saying is if we went this route.
Yes.
And so in November, we had this information from this new account.
Yes, I get you.
Okay, I'm sorry, I wasn't following it.
What this firm will do, Joe, is, I'll use the Warrant and Finance Committee for example, is we won't have to wait for the audit to find out where the financial status is, what the standing is. So if we meet in November, we can ask what a financial statement is, situation is, and we'll be able to have that in.
They've indicated in the second year, once they've done all the records, they've maintained the general ledger, by the 1st of August, you'll have a set of financial statements for the prior year.
What we need to do wouldn't be, based on waiting for the audit, so we can do our job, because throughout the year, we'll be able to know what the finances are without waiting till the audit, so it'll be a big help.
It's a huge difference.
Big help.
We'd have it, anyway.
Did I answer that all right, Joe? Anybody else? Leslie?
Yeah. Couple things I wanted to say. Tom, internal controls protects people. It's not accusing them.
No, it's just
they
people.
protect- No, I know, I mean, it's.
People get they're thinking
I'm trying to dispel
Yeah,
that
yeah.
it's accusatory.
Yeah, it's not, not at all.
It actually protects people.
Yeah.
And Charlie said that there was, problems noted in 21 about the auditing problems. Is that what you were saying? Yeah, anyway, back in 2019, I spoke at a Board of Selectmen meeting, talking about the perils of not changing auditors, and found that was dismissed, my concerns were dismissed. And it was another taxpayer also wanted the auditor changed, but anyway, I think this is a fabulous addition. And I wholeheartely support it. My concern is what if the town votes this down? What do we do then?
I don't know. We'll have to come up with a plan B. I think, I'm sorry, go ahead.
My question is, so we've been having the auditor do the financials. Why isn't our treasurer, is there a reason our treasurer doesn't do them? Either, and then this goes back many years.
This has always been this way.
I know.
That's my knowledge.
Is there a reason why that they don't do it?
Acton is not alone. This is how many towns, small towns in Maine operate. You're not going to find it in Sanford or Portland or places like that. But in small towns like Acton, it's not uncommon for the town to not have the ability to prepare financial statements.
Is it because of lack of training? Because if it's lack of training, we can get that training for the treasurer.
Well, it's, preparing financial statements is one thing, but I think we're buying a lot more than that here.
I agree.
Okay.
Like I said, my concern is if town meeting says no, and I don't think they should say no, because I think that this is a fabulous thing. That's my concern is, then if they say no, then we've got a problem with, trying to find an auditor to do the financials, which defeats the whole purpose of the audit.
I agree with what you're saying, but what we need to be dealing with is what we know for a fact. And if the town does vote this down, then it goes back to the selectmen and they can come up with a new solution.
We'll have to figure it out.
So I guess I'm saying that your opinion, I welcome it, but I feel it's kind of off of what we're talking about.
I don't agree with that, but.
And I agree with you not agreeing.
I just want to say that it's my understanding the town has gone through multiple RFPs in prior years for audit firms, and they have been unable to get another firm to bid. So I'm not sure that was always transparent, but there have been, maybe it was before my time. But last year was not the first time an RFP was done, and we only had one bidder. It was done prior to that. So this is a situation that's been going on for a while.
Because we were noisy, they wanted, I think, to shut us up.
Yeah. I didn't hear that, but that's probably just as well.
Just okay.
Go ahead, Charlie.
You had mentioned the firm being willing to come and attend meetings as the board sees fit. Is there, I see no mention in here about additional fees or anything like that for that?
No.
All going to be included in the package?
There could be some travel costs, but not an hourly rate.
Okay.
Yeah, there will be a break point, and we don't know what that is, and neither do I. If we have them here every week, and, there's going to be a point where they say, no, enough is enough. But if we're judicious in what we ask for, I think they're going to be fine.
Okay, and if we are separating the audit from all the accounting, which it should have been, I'm surprised that was all done by one firm. But anyway, and that's probably the reason why nobody wants to pick up that bid. What do you envision the separate audit cost to be?
I'll be honest with you, I think when we go to another firm, they're gonna be less work, they're not gonna be preparing the financial statements.
Right, and so it'll be much
I'm not
quicker.
planning, I don't think we'll save a nickel. And I wouldn't be surprised if you go to a typical firm, we'll see what the market requires, but I suspect it could be more. Because I'm gonna tell you, in my world, you couldn't get an auditor to come in the door for under $30,000. But if we can get somebody to come in at these rates, and the audit is very simplified, because the financials are all done, the notes are all done. So if you can get a firm that comes in and just, wants to, have a nice smooth audit and give us a reasonable fee, I guess we're gonna find out, Charlie.
Okay, and then the last issue is, a lot of times when you do contracts, or at least the contracts I'm used to, you're guaranteeing to perform in a specified period of time, particular service. There doesn't seem to be any performance penalties for projects that the town has requested.
From this firm?
Well, if they keep putting off these dates, and I would say, no, there hasn't been any for this firm.
There aren't any, and I've never experienced anything like this in my life. So I don't think anyone really contemplated it, and to be honest with you. So I don't think the contract has any performance penalties. I don't recall seeing any in there. And I bet if we put them in, we would have probably paid more. And so typically you pay for any provision like that in a contract, you're gonna pay for.
But we run the risk of not having the budget available for the state, for the school. That penalty could be much higher to the town than what.
I'm trying not to mentally
If
go there,
I may, Tom,
because I just want to get the
about this a minute.
financials.
Right.
Charlie, again, I think we're getting off
Yeah.
task just a little bit.
No, it just needs to be-
I understand your opinion and voicing your opinion, and I appreciate that, but I think that we have to bring it back to
Yeah.
exactly what this warrant article says.
Yeah. Okay.
Anybody else?
Want to handle Article 4?
Sure.
Thank you, Tom.
Thank you.
Thank you.
Jen?
Okay. So Article 4, first of all, I want to put out there that there have been some changes since the Board of Selectmen have discussed it as a whole. A lot of this is a recommendation I've come up with over the phone and talking to them individually. So you do need to actually vote on it on Wednesday, but knowing that you were going to be hearing it tonight, I spoke to both road commissioners, treasurer, and we've made some changes to it. So it says to see if the town will vote to appropriate a total of $85,000 from the unassigned fund balance. Up to $55,000 will be used to ratify the overdrafts in District 1 and District 2 winter maintenance accounts for FY '22. After the ratification, $15,000 will be placed in the District 1 FY '22 winter maintenance account, and $15,000 will be placed in District 2 FY '22 winter maintenance account. Any unexpended funds in either winter maintenance account as of 6/30/2023 will be returned to the unassigned fund balance. And if you flip to the next page, we can talk about where we came up with these numbers and
Jennifer, could you go back? I'm sorry, I didn't catch this from you earlier. Did that say FY '22 or FY '23 in the previous
well,
slide?
22, 23.
Oh, okay, I think it says 22.
Well, it's 22, 23. 20,
Okay.
That's-
All right, okay.
22, 23, right? Yeah, okay. Yeah, that's what they call it. All right, so approved at town meeting for 22, 23 for both districts for winter maintenance was $96,811. State law says that you can go over up to 15%, but after 15%, what's the matter?
I don't have this.
It should be the last page on your...
in the last page.
In the PowerPoint.
The PowerPoint packet?
I'm sorry. There? All right. So state law allows you to go over 15%. So 15% of $96,811 is a little over $14,000. So as of today, including the payroll that was turned in today, District 1 has spent $114,904.85, and District 2, $123,714.07. So as you can see, they're both over 15%. So the amount that we're coming up with, the 85,000 is broken down as follows. We need to ratify District 1 by giving, by the 18,093 that you've already spent. We need to ratify District 2 with the 26,903. And then you'll see another line that is effective from today through April 19th, which is effectively your special town meeting. If it snows next week or before April 19th, we would have to ratify those funds that we spend to plow the roads. So we have, for rounding purposes, put in $10,000 there, because we can't wait until we get to town meeting and increase the number. Okay, if it doesn't snow between now and town meeting, then there'll be no extra funds to ratify, it'll just be the 42,000 that we're currently at. But there's a gap of time that's not a chance that you can take. Then what we're proposing is, effective the date of town meeting through June 30th, giving them an additional $15,000 each in winter maintenance. Now, we hope as of April 19th, they won't need it, and it'll all go back and unassigned, just like the article says. But again, that's a chance that, it's Mother Nature. So that's how we came up with the 85,000.
Thank you, Jen. Any questions on this?
Yeah, does the winter maintenance include like sweeping the sand?
No.
Well, that's the spring, okay. So you're talking about just plowing?
Plowing, sanding, pushing back, snow banks, corners,
Strictly snow stuff.
yeah. Whatever expenses are related to the particular snowstorm. Anything else from anybody? Couple of things on this. I agree with this article completely. I think putting the dollar amount a little higher than what we need at this time is appropriate. The snow budget has been overdrafted for as long as I can remember. Hopefully when we do a new budget this constant overdraft will be addressed, so we don't have to go back and have a special town meeting. I realize it's you can't control what it is, but I think there's also precautions that can be put in there so that, whether we put in in the future, if we put in a contingency account to cover these overdrafts, if we incur them or not. Great idea, I support the selectmen putting this forward. And the road commissioners are fine with this, obviously. So what I want to do, with seeing no more discussion on this, I assume that the selectmen would like to have us take a vote on this stuff tonight.
Correct.
And so as I do quite often, as long as Margarita doesn't mind, I would ask Margarita to read the warrant articles, because she talks a lot clearer and faster than I do.
I don't mind.
Thank you.
Do you want me to just start at articles or the little blurb above it?
Article 3.
On Article 3?
Two.
Two.
See, I was gonna do away with that one, sorry.
Article 2, to see if the town will authorize the select board to invest town funds per the town of Acton's investment policy.
Can I have a motion, please?
Second.
I'll make a motion to approve Article 2 as written.
And Charlie seconded it? Yep. Any discussion? Seeing none, all in favor? Please raise your right hand. All those opposed? Opposed to this article?
Opposed to the article, yes.
It's 3-3. Now,
Fails
That was
then.
a fun one.
what's that?
It fails then.
It fails.
Fails.
Right. The motion fails.
The motion failed.
So we need to have a discussion so that we can have a positive motion one way or the other. We can't. Or we could could say, if somebody wants to make a motion, that the Warrant and Finance Committee does not make a recommendation on this warrant article. Go ahead, Jen, I'm sorry.
Can I just ask why you can't approve the article as written 3-3? I mean, I realize that it's a
Because
time
under
vote.
parliamentary rules, 3-3 is,
Well, I
it
realize
doesn't pass. and-
Well, I know it fails, but the number, I mean, it's still written as a 3-3. It's still an accurate measure of what the committee chose.
I appreciate that, what you're saying. And I'm not disagreeing with you. All I know is my past history on the Warrant and Finance Committee. What Charlie's saying is
So if
absolutely
you
right.
do,
3 to 3 is 6.
I thought it was only a 5-member with 2 alternates.
No, the 6
6
members.
with 2 alternates, okay.
Yeah. And I don't know why the town set it
So
up
if it's ought not to
that way.
pass 3-3, you would be fine with?
What's that?
If it was ought not to pass, if somebody changed the motion to ought not to pass 3-3, that's okay because it fails and ought not to pass is negative?
Then that means the ought not to pass is a negative, which means it turns into a positive.
Okay.
I understand the confusion.
But I'm not confused.
But Charlie is right.
See that?
So what I asked for, number one, is there any discussion on this? Because the motion fails.
The reason, all right, well, the reason I voted against it is because there's no timeframes in there to determine what to do with the surplus funds. That, in my estimation, for me, that's a deal breaker, you know, we've got all of these excess funds and no time limit to put a plan in place, you know, whether that be 1 year, 2 years, whatever. That's something that I need to see in this article.
So that could be a motion for recommendation of the Warrant and Finance Committee to amend the article to read that, what your intent is.
No.
Can you amend, I'm sorry.
Go ahead, Tom.
Can you amend an article?
Yeah.
You can, okay.
Because what we do is we recommend the wording of an article. And historically, the Warrant and Finance Committee has always done that. And that's my understanding of the ordinance. Charlie doesn't agree with me. We've had this discussion, but this is where we've always done it. And you look at past town meetings, you would see, doesn't matter what it is, some warrant article the selectmen put forward, and if the Warrant and Finance Committee doesn't agree with the wording of the article, they make their recommendations with amending the article to change a word or 5 words or whatever. And I say that's under the authority of the Warrant and Finance Committee and its chair, that's how I'm gonna operate. Go ahead, Tom.
May I make a comment?
Sure.
I can't help but point out that failure to pass this is the equivalent of foregoing $180,000 in revenue. I
Right.
just want to make sure people understand that.
Yeah.
Okay.
And I'm fine
Yeah?
with your opinion, Tom. Go ahead, Joyce.
I'm in favor of this, and I think from what we've heard tonight, and from what we've heard not only from Tom, but from Kim as well, on, not only on this article, but on bringing in an accounting firm, that tells us a lot. And I think that, you know, we're going to have 1 year that's gonna be a curve, no matter what. We'll probably have these new guys pulling out their hair at some points, you know, in time, because they're working with a small town. And, you know, it'll all settle down, and things will become much clearer. By the second year, we're gonna be in a very strong position to know exactly where our books are, to see why, perhaps to see why we have been growing money like, you know, we have. And in the meantime, if we have just left this money in, you know, community bank, something or other, earning 1%, we have done an enormous disservice. We would be earning money whatever amount Tom says, I'm not going to claim I can remember all of those things, but we would be earning money that going forward would mean it will help keep taxes down. It will help with infrastructure. It will help with capital improvements. It will only give us positives. I cannot really see losing the opportunity of, I mean, there are unknowns, but there are so many things that we know historically. Charlie, I'm done, I'm sorry, that was yours.
Let Leslie go.
Leslie?
This doesn't have to fail. All that needs to happen is there to be a clause put into this article that we would have a plan to deal with the surplus that is acceptable to town meeting in a year, 2 years, no more than 2 years.
Okay. Charlie?
2 years is pretty generous. I don't know, is, by policy, we're not allowed to write articles, number one. So we either endorse this or we don't endorse this. I agree with Tom that yes, every month delayed is X number of dollars opportunity lost. But I don't like crisis management, and that's what this is. This is the second time something's come before this board to approve an article where you're given the documentation at the 11th hour, and someone makes a comment that, you know, if we don't do this, we're going to miss this opportunity. That just doesn't sit well with me. This is something that's probably been boiling for a while, and it should have been brought to us with enough time to where we could actually provide input or provide comment other than yay or nay. I mean, I agree that yes, it should probably pass only because it's a lost opportunity. And at the same time, I think it comes down because I don't like crisis management.
There's a couple of things here in what you're saying, Leslie. To solve the conversation we're having about changing the article, wording of the article. As you can tell, Charlie and I are completely opposite sides on this. I guess I would ask the committee if you would be willing to put this forward the way it is, because you do have the right to amend this article at town meeting. You can make any amendment you want. And that would, and see if the town meeting agrees with what you want to do or whether they don't. And so what I would ask for a new motion.
Before.
Go ahead.
What would be the difference? I mean, we can always amend it.
Yeah.
At town meeting, whether whether we say yay or not, or nay. So what difference does it make if it's a 3-3 or what?
Because parliamentary, a 3-3 is a no vote either way. That's just the way it.
It's a no vote, not a no vote.
Either way,
Yeah.
positive or negative. That's what a 3-3 vote is.
It's a no vote. It's a no vote. It's not it's not something, you don't just throw it away. It's a no vote. It
Right.
fails.
We have to, the motion failed.
No, well, the motion is to whether or not to approve the article as written. And so by having it fail, it's ought not pass.
I don't agree, and as chair, I'm not going to accept that.
I vote the decision of the chair.
Unless the
Dennis, are
committee
you
wants
saying are you saying that it can pass with a 3-3?
No, I said it doesn't do either.
Right,
It doesn't pass or fail.
The chair is the same.
okay,
Because we have to have a majority
right.
for it to go one way or the other. You know what I'm saying, Phil?
Yeah,
You have to have a majority. It would be a lot easier if we had a 5-person board. But when this was set up, whenever, they didn't take that into consideration. Now, I'm the one, and maybe this is what the committee wants me to do. I'm the one, I don't have to vote as the chair. Many chairmen of finance committees don't vote.
They only vote if there's a
And
tie.
then only vote if there's a tie. And if that's what the committee wants me to do, I'm fine with that too. Withholding and then that would do away with the tie. The fact is, maybe that is a solution. And that is,
We can ask that now.
that's what I'm gonna do. Okay, I'm gonna withdraw from voting on this, and I'll ask for a new motion, and we'll vote on it.
All right, so,
Joe's,
Joe,
I just want to say one
sorry.
thing. The significance of this whole thing is it brings to the point to the taxpayers and everybody in the area, or whomever, the situation the town is in, and it's a good situation.
Yeah.
And it gives us the option, if we want to invest and get a higher return, or we want to say, okay, now we got $1 million and we know we're gonna need a new roof down at the school, we know we're gonna fix the walkways, we've gotta do this, we've gotta do that, something with the dump, etc. So then, we're gonna go over a period of time and say, okay, we've got this money, and we can kind of jockey it around. But it brings to light the fact that it's there, instead of hearing $6 million, $2 million, $3 million, back and forth. And I think this whole thing is, the little town is growing up, and we gotta focus in on what's going on in reality.
So I'd ask for a new motion, please.
it has to be done by someone who voted yes. According, because I'm looking at Robert's rules right now.
Right.
Okay.
Somebody make a motion,
I
please.
make a motion to accept the article as it's written.
Is there a second?
second.
All in favor? All opposed? It's, 2 yes, 3 no. Now we have a majority, and then we came up with a solution to move past this, because I'm not gonna change my mind, and I know Charlie's not.
Well, I can't vote.
I know, but your opinion's still welcome though, Charlie. Just
Ready
like
for Article
everybody.
3?
I'm ready for Article 3.
Article 3, to see if the town will appropriate $65,000 from the unassigned fund balance, which appropriation shall carry over into FY '23-24, and authorize the select board to expend said funds during FY '23-24 to engage the certified public accountant services of Barry, Talbot, and Royer.
I'll make a motion to approve Article 3 as written.
Is there a second?
Second.
Any more discussion? All in favor? 5-0.
Oh, you withhold from all of them now? Gotcha.
That's it.
I answer at town meeting if they want to know it.
That's it.
I'm not voting against it. I'm
Right.
just not, I'm abstaining, I guess. Sorry.
Article 4, to see if the town will vote to appropriate a total of $85,000 from the unassigned fund balance. Up to $55,000 will be used to ratify the overdrafts in District 1 and District 2 winter maintenance accounts for FY '22. After the ratification, $15,000 will be placed in the District 1 FY '22 winter maintenance account, and $15,000 will be placed in District 2 FY '22 winter maintenance account. Any unexpended funds in either winter maintenance account as of 6/30/2023 will be returned to the unassigned fund.
I'll make a motion to approve Article 4 as written.
Accept it, second it.
Moved and seconded. Any discussion? Seeing none, all in favor? 5, 1 abstention. First off, I'd like to thank the selectmen and town administrator and the treasurer for getting this stuff ready for us. We are going to, next week, and I'll talk to Jen, That I'm not sure off the top of my head. I believe we're gonna start meeting with the social services next week. We have listed them out. Jen and I haven't gone over yet who asked for money and who didn't, so when we made these out, it probably won't be the same as with that. Saying that, there are also some questions that we still have, that we've had on the road budgets. Some of the monies that they put into the road budgets, we had questions about. I do know, I think it's Wednesday, the selectmen are meeting with the road commissioners to go over this. I guess my question would be to this, we are gonna probably wanna talk to the road commissioners again, and maybe a few other departments, so they can answer what questions we might have. Obviously not to the detail it was in the past, but, and probably the rec. I will forward some questions to you, Jen, that we had for the road commissioners. I know one thing, there was a conversation was, we'd like to see a, line laid out for the extra $20,000 they're asking for in there. Someone made some explanation. A few things like that, but I'll pass them on to you. And I would like to thank everybody tonight. I don't think I've aggravated more than 2 or 3 people on the committee, so I consider that a pretty good night for me.
He's so modest.
Pretty good night for me. And I don't know if I've ever made so many, shall we call executive decisions as chair as I have tonight. And once again, everybody's opinion's welcome. We'll discuss this stuff and move forward in a positive manner. And it's not 8 o'clock, Margarita.
I'm awake.
And I've been looking at my watch, if you notice.
Jennifer.
I'd like to have a motion to adjourn.
I
haven't been getting the.
All in favor?
Things from the.
Good night, all.
I voted on that one.
You never got into.
Thank you, everybody.
You're just.